let's look at the numbers that are flashing on your screen, and that is of UltraTech Cement. Look at the numbers that have come in. Revenue, when you compare on a year-on-year basis, that's seen a growth of 17%, coming in at 17,737 crores. So slightly better in terms of the revenue front. We were expecting 16% growth. We're seeing a growth of around 17% there. Profits of the company that have come in at 1,688 crores versus 1,584 crores, a growth of around 6.5% on a year-on-year basis. EBITDA performance standing at 3,049 crores is what the EBITDA is. That slight bit of a decline that is there on the EBITDA, 1% decline there, and the margins, that's seen a contraction of around more than 300 basis points. That's for UltraTech Cement, that is at 17.2% versus 20.4%. So the margin front, we are seeing a decline coming in over there. Other than that, let's look at what the other commentary is coming in. The demand for cement across all the sectors had actually continued to remain strong. That's the word coming in from the management. They are saying the higher infrastructure spending is ahead of the general election in 2024. That's what we generally see as well, Trishti, and that is what the update is there. So revenue in line, margin below according to ET Now estimates, and PAT in line. But we have Gaurang Shah joining in with us as well, Senior Vice President at Geojit Financial Services. Gaurang, thank you so much for joining in with us. And first thing, how are you looking at the numbers? Seems like largely it's in line to slightly below actually in the terms of the margins. What is your first cut coming in for UltraTech Cement?
Thank you very much. Good afternoon to all of you all. Well, firstly, I think a little bit of margin in one quarter should not be a reason to make any major changes in your portfolio in case if you hold UltraTech Cement in your portfolio. Point number two, our expectation in terms of offtake of cement bags is going to be quite high because of the demand, given the fact that even the government has announced fast pack of infrastructure projects under the Gati Shakti project. Numbers, well, according to us, margins are the only slight miss, but other than that, they are in line. As a disclosure, since we are discussing UltraTech Cement, we have a buy coverage on the fundamental side on UltraTech Cement from a long-term point of view. And along with that, I think demand from the semi-urban and rural India is going to be much higher when it comes to moving in from, cement concrete houses. So that's where it's going to be another push also.
Okay, hi, very good afternoon, Gaurang. This is Shrishti joining in, but like you continue to stay bullish on UltraTech Cement. Specifically wanted to ask on the margins, because yesterday we also saw Dalmia Bharat numbers. They were also not that great, but UltraTech Cement margins have been a disappointment. But given the rainy season, how are you looking at and penciling in the margin figure for quarter two and beyond? Do you expect some improvement from 17.2 number reported this time?
I think we should be above 18.5 or closer to 19. This is just an assumption that I'm giving you. And even Dalmia Bharat, again, since you took that name, that's a one stellar mid-cap cement stock which has been outperforming to the greatest extent. We have a buy coverage over there as well. But on UltraTech, I think not only UltraTech, I think most of the cement manufacturing companies are likely to throw in more of operating efficiencies and bring down any kind of headwind with respect to the input cost or raw material cost is concerned. So that will start looking better from second and third quarter onwards.
Right, Gaurang, and just one more thing, when we see that fuel prices, that witnessed a major correction as well. So what was it that, mainly was that disappointed in margins? Just putting further point on that, what was the main reason for this margin being a bit subdued this time then?
I think there has been a legacy of raw material or input cost at a higher side, even not now, but even in the last financial year, actually go to see. Most of the cement companies had an issue with the raw material supply and the cost of raw material being on the higher side. I think over the period, the raw material costs have kind of come down, but not as much to the comfort zone of cement manufacturing companies. For it to further come down, I think we have to give a little bit more time. Once that happens, I think we'll see improvement in profit margins going forward from here.
Okay, thank you so much, Gaurang, for joining us today and helping with your first cut on UltraTech Cement. So the numbers this time around have been reported to in line to a mixed set of numbers, and that's what you're flashing on the screen. All the margins have been below the Street estimates of 7.2% is what the company reported, but other than that, the revenue and the profit figure has come in line to the ET Now estimates.